Right. And then Japanese now that it's over, it's done how did it all quite often. But you also have to have happen to the work also too. This is really interesting. Lessons we had this minutes ago. Billions of dollar contracts. That becomes one kind of finance. Sending and you can have that be great. So one second, how about now? Check, one, two, check, one, two. Let's take a look at the board today. Oh, check, one, two, right, check, one, two, check, one, two, right, check, one, two.
Mic check, 1, 2. Mic check, 1, 2. How about now? 1, 2, 1, 2. Mic check. Can I get a mic check? I think I got this one. Muffled? Muffled? Mic check, 1, 2. Mic check, Oh, I understand. Mic check, 1, 2. Mic check, 1, 2. We're back in business. I'm sorry. Listen, this is technology. Obviously, I'm an engineer, but this is some complicated stuff we got going on. Mic check, a Cobra in the house. Thank you. All right, so we got the S&P 500 here, and I wish I could edit out the first part of this video. What a waste of 5 minutes. But look, the definition of a bull trend is higher highs and higher lows, and this is clearly not breaking a higher high, and clearly the low is horrible. So this is a bear market, and clearly this is. It's more than that because we know what's going on financially. We know the big picture. We know the macro perspective. This is far from sustainable. In fact, this is overwhelmingly not sustainable. But they could just keep trying, and that's exactly what the Federal Reserve is doing with their liquidity injections. They're trying to prop up the entire market, hoping probably for it to come through the other side without experiencing a massive, massive collapse. Um, do not for a second think that this cannot collapse. Um, I am more fearful than ever before, and which is why I talk about the topics that I do. We need to protect ourselves and be diversified. And this is a perfect example of why. So many people are trading on the markets and they look at stocks like, I mean, just look at this stock, this the S&P 500 index. It's absolutely horrible. Um, Look at Tesla. This is far from sustainable. If we saw this in crypto, like the following day, we'd see a 20% retrace. So um, this is this is far from sustainable. It's actually quite disturbing. Tesla as a company, I absolutely love, and I wish I can invest in it. But what the speculators have done with the markets is something that I makes it not touchable in my books. I would never ever put any hard-earned value into something like this. It makes no logical sense. It's irrational and it's dangerous. It's gambling, and I think in placing value into crypto assets is a much more logical gamble than this type of entity. Look at the structure that it's painting. Clearly fundamental analysis is what I always fall back on. And in the equity space, fundamentals are financials. They are looking at the revenue of a company. And in crypto, it's the technology and how it plays into the system and something that it's going to disrupt. Um, Looking at the comments real quick, Digilight wants to tokenize Tesla and Digivite. It wouldn't make a difference. The problem is the manipulation and the liquidity that is made available by the printing of trillions of dollars. Uh, this is a big problem that's going on, and by moving things over to crypto, that won't solve anything. Um, you see, the amount of money that's out there that they printed and the amount of debt that's out there, unfortunately, when this thing comes crashing down, it's going to take out crypto also. It's going to take out everything. And that is why they're printing so much because they know when it implodes, it's going to take down everything. It doesn't matter what it is. Um, I think they're scared, and I think that's the truth. Uh, they're trying their best not to allow chaos to happen. So you got to remember, if the markets come crashing down, and it's not just equities, it'll be housing, it'll be everything, the treasuries, bonds, corporate bonds. That takes out employment. That takes out logistics and food transportation. And all of this is metaphorical for the stability of society. And what happens when people lose? They get angry and frustrated, and that's when chaos happens, and that's when you have social unrest and civil disorder. So this is the repercussion of them trying to maintain order, maintain the status quo. And as much as we want change, we want crypto change, um, we shouldn't hope for it because it's not going to be pretty. And it's not going to be a simple transition to a new way of doing things. Um, we should have fear of that time, which is what Plan B talks about. Plan B talks about Bitcoin going, half a million, a million. Yeah, that's systemic change, and that means there's going to be some serious unrest in an event like that. So he's fearful as well, and I absolutely agree with him in that regard. Um, I'm fearful. Look at this chart. I'm fearful when this comes crashing down because everyone on all the Robinhood traders are throwing in dollars here, $100 there, but then they lose it. And that's emotionally devastating when you lose value like that. Uh, Depression, estimated winter 2020. We shouldn't hope for it. We shouldn't. It's very scary times, guys. Very scary. So that's the whole point of this video. I want to talk about the macroeconomic landscape and how crypto fits into it. And it really fits into, most importantly, being diversified because if, likely when, the system implodes, you need to be diversified because it's all going to tank. Gold, silver, precious metals, everything will be crypto. It's just going to be obliterated. But we're talking about what is the best possible position and what comes out the other side. And clearly, there's absolutely no reason for fiat to come out the other side. So that means, in the worst case scenario, overwhelmingly, logically, technologically, the crypto's much more likely to come out the other side after significant pain for everyone. Um, and crypto's doing wonderfully, and it's benefiting from the amount of liquidity that's being injected, as many folks note that crypto is correlated, Bitcoin particularly, to the markets, the equities markets, and that has proven itself to be the case overwhelmingly. Um, stock to flow model from Plan B is a nice theory, and it makes logical sense. And we'll see how that theory gets tested over the coming months and years. Um, all I know is that with regard to diversification, um, it makes sense to have enough liquidity available, enough fiat available to pay bills, but I don't see myself wanting to over position into dollars. Do we expect a bull run in dollars? Does that make any sense? Uh, Colbro says, I'm not hoping. Realist, especially once government payments and both sides of the pond. What are people going to do? It's going to be complicated. James, Kyber upgrade tomorrow? Yes, we are ready for that. I myself am looking forward to that tomorrow. Let's take a look real quick at synthetics. I have the Kyber chart right behind here, but synthetics looks really good. Look at this nice appreciation. Look at this nice staircase. This is a bull market. You have higher highs and higher lows. And even here, you have a bit of consolidation with a triple top, so to speak, but it has nice range with a double bottom. So it has proven itself to have some support. There's support here where the cursor is, obviously. And, if you go back to Tesla, there ain't shit. There's no support anywhere. So when this thing comes crashing down, it's the same thing that we like to say with crypto with price discovery. There's going to be discovery of where the bottom is, and that's the exact same thing with the S&P 500 in many regards. Where is support? I mean, look at this. 2200 was the bottom. You have a massive range. I mean, there's a little bit of support over here. It was at 2450, 2475. This is horrible. Oh, it's scary to say the least. This has absolutely no support. 1,000. A 30%, was that 30% drop? The third, whatever. 300 off 1300, give or take. Um, Synthetics looks good. I think that the nice support over here, you probably, if you're looking for an entry, you'd probably wait for it to get back to that support and see if it holds it. If it holds that support, that's three times hitting that support. That's a nice trifecta that makes it reasonable to place a position there, that it would go up from there. So I would wait if you're thinking about synthetics. Kyber Network. Oh goodness, what's going on tomorrow? Check VeChain. It's outside the scope of what I consider for my portfolio, but I don't discount its relevance. It's something I could talk about. I don't want to take away from this particular video, though. Um, I'm very excited for tomorrow morning. Obviously, with this massive amount of upward movement, I've taken some profits, placed it into Bitcoin and Ethereum, but I still hold was one of my largest positions, Kyber. Always remember, as things substantially appreciate, look at the pullback. This thing was at a buck 95 and pulled back to $1.58. So if you sold at $1.95, you took some profits. Um, that was a good profit taking, and you could buy a little more if you want down here. But as things go up, it's important to take profits. You never, 1, 2, 3, 4, 5%, and we'll end up seeing a massive move in Bitcoin and Ethereum inevitably over the next 2 years. So as they said back in 2016 and 17, stack sats. And that is more appropriate now than ever with this massive appreciation of altcoins that we've experienced. Look at this. This is actually a nice entry for Kyber. Look at the support over here. You got support down here at about a little 1600, and then was that about 17 and change? So there's a fair amount of support between here and here where the mouse cursor is. I wish I could draw on this. I don't have enough performance for the computer to hit up TradingView. One day. But there's nice support over here in a 2,000 point SAT range, which is not horrible. In crypto land, that's a decent range in many regards. And clearly, we have a massive release. And the whole point of Kyber is to accumulate and earn a recurring revenue stream. So that it goes into portfolio balance. You want to take profits on the way up, but you also want to accumulate. So what does that mean? This all comes from gut instinct. Um, you never want to liquidate the entirety of the position. The whole goal is to accumulate and achieve the recurring stream. But if it goes up, you need to take profit. So you got to take all of these factors into consideration and how you create a balanced portfolio and your position sizing. Um, and there's no specific way to do that. There's no science. It's a lot of gut instinct. That's what I'll say over and over again. Very meaningful. Let's take a look real quick at Ren, because Ren is a beauty. Interestingly enough, with Ren, because of the dark node bonds, you can't take profits. So there is no. That's what's interesting about Ren. There is no purpose to having Ren other than for bonding and dark nodes. Speculating in the price is something I wouldn't consider. It's just not what is consistent with why I entered into the position. I mean, clearly with the dark node bonds, you're talking about supply disruption. You're talking about supply being removed from the market. There's about 10% supply disruption going on right now, which is massive. Could you imagine a 10% supply shock to gold, what it would do? Um, Probably not much because of the global manipulation, but that's another story. But the market cap size of these entities means a 10% supply disruption causes significant appreciation, and that's probably what accounts for the run from 1,000 to 1,700. That's a 70% run. So, sure, you can take a speculative position. Uh, it's actually a decent position to get in because you have a resistance flip support. Notice that here. If it holds right at this line at about 1776 and it starts an upward trend, that's a nice position. And I'd look for it either to get halted at about the 1905, or if it pushes through that, woo, that's when it keeps on going. I mean, that's how you do the trading. You want to find those entries and find those sales targets. Um, so these are a lot of technicals, but let's get back to fundamentals. Got a couple of questions. Did you go over StakeNet today already? I haven't gone over StakeNet. Let's save that for another video because I've already touched on three of the DeFi picks, but I wouldn't mind rehashing because that's what I think we should do at this point with some of these videos is rehash some of the topics we've discussed. But let's go over StakeNet, BlockNet, and Komodo. We'll talk about JellySwap again. That was a great topic. I think that brings a big important piece that's been overlooked in this DeFi mania, because DeFi really has only been Ethereum ERC20s, or Ethereum plays and smart contracts, whereas there's a whole other world, UTXO world. And what's most meaningful about UTXO world is that that's where all the equity is. That's where 170 plus $1 billion is. That's not in DeFi right now. So when we talk about interoperability and liquidity and DEXs, that is untapped territory, and there's really only four players right now: old school BlockNet, old school StakeNet, old school Komodo, and new school JellySwap. That's it. Period. And that has yet to come to market, and it has to. It's inevitable. It will. It's important technology that uh, alleviates the issue and risk associated with the centralization of exchanges, and it achieves the exact same thing that One Inch Exchange and Maca and which aggregate Uniswap, Kyber, Balancer, Curve. It does exactly that, but in DeFi land, in UTXO land. And that means it's completely uncharted, untapped territory that has 10 times the amount of available capital. Absolutely fascinating. Domo says, well, let's see if I missed any. Charlie says, thanks, Noah. Check out Divi. Uh, Not too much that I have to say about Divi unless it has utility. I appreciate masternodes because obviously StakeNet, BlockNet has a service node, Zcoin. There's a bunch of masternode projects that I've been participating in for years now. But unless there's a particular utility, I'm not interested in it. Um, there's been thousands of masternode projects over the years, um, and just look for utility. BlockNet, the service node, has a function. It does something, and StakeNet the same thing. I mean, even potentially even Alquo has utility, which is something that's very important to look for when uh, placing a position in a masternode project. What does the masternode do? It has to do something. Very important, everybody. Domo, I totally agree with you. There being no real purpose to holding Ren, even for a speculative asset, there's better options. Well, I mean, not necessarily. I mean, Ren has had some substantial appreciation, but I don't like speculation. I'm not a speculator. I don't like gambling. I don't like bets. I like the fundamental analysis. And when the fundamental analysis results in price appreciation, you take profits. Um, but the entrance into the position was based on the fundamentals of the project. And one, that's much more satisfying. It means you weren't necessarily just gambling. You placed value into something because it actually has meaning. And these assets, Kyber, synthetics, REN, have meaning. These are very powerful technologies that, are targeting to disrupt the legacy systems and even the crypto systems. REN does something very meaningful. It's profound technology. Um, so it gives meaning to your investment. It's not just, oh, I want to make money. Yeah, that's important, but you know, if you root the choices in meaning, it makes it all that much more meaningful. Craig says, for people who cannot afford enough REN for run a dark node, does it make sense to still hold a bag for when Grey Core goes away? Well, I don't know. Everyone individually will have to make that decision. I would not speculate on REN. I mean, look at this chart, though. I think there's much more upside. I mean, REN could clearly consume billions and billions of dollars from UTXO land. And the entire protocol dynamics of the smart contract algorithms is designed to force appreciation of the REN asset. So, you know, there's logic to speculating on its price. So no, it neither makes sense nor does it make sense to be in a position or not in a position. It depends on your goal and your purpose and your risk reward analysis. As I said, if there's a problem with fiat, if the S&P 500 tanks, it's going to take crypto with it. And guess what happens with these DeFi plays that are up hundreds and hundreds of percent? They're going to tank. I mean, they're going to tank, 30, 40, 50, 60%. I mean, you got to remember the 2016 perspective. Everything was down 99.5% over the last 3 years. Everything crashed. So do not for a second think that can't happen here. And that's why speculation doesn't mean much. For instance, if you bought a masternode for, let's say, $16,000 and it produces $1,000 a month, and the market tanks, and that 16 is worth five, but the dark node is still producing $1,000 a month. Is that bad? Now that's a perspective to consider. Now you can't even liquidate your dark nodes because they're locked. I think it takes 2 months, give or take, 3 months to liquidate a dark node. So I think that's a great benefit. If you're locked up in a dark node, you can't even liquidate if you wanted to. So that creates the strongest of hands. And that's quite interesting. Let's take a look at the comments. Digilight, is Kyber Network going to be staked through a mobile app? No, Kyber Network is going to be staked through a D app. D apps are web applications that interact with Ethereum smart contracts. So you just go to, was it kyberdao.org tomorrow morning, 7, 8 a.m., give or take. I believe it was 7 a.m. Eastern Standard Time. And you'll be able to stake your Kyber and receive 65% of transaction fees. Was it 30% goes to the liquidity providers and 5% gets burned? And I think it's a great I think for me, I look forward to locking up assets and not even having the option to liquidate. Synthetics kind of offers the option to liquidate because the 750% collateralization, as the price increases, so does your collateralization. So you can actually sell off synthetics and still maintain appropriate collateralization, but you're going to reduce your weekly gains, your weekly SNX rewards for minting SUSD. Um, so that's a consideration. Tough choices, everybody, but that's why we're here to talk. Brandon says, I'm actually working on a Ren pool. Potentially, you could deposit 10K to get access to rewards. Sure, it's my man. If someone's going to do it, it's Brandon. I think that is an interesting play. Um, I don't know how it's overwhelmingly done technologically, particularly because the dark node requires an actual server deployment. So there has to be some sort of centralization of authority and control at some point. What does that mean? I don't know. Will people contribute? Likely. People contribute to much worse things in the crypto space than something that actually is a legitimate way to access the revenue stream associated with a dark node. So I think as long as trust and credibility is established, a nice presence with a nice website, maybe a DApp, maybe it's somehow automated, through contracts, then I think it will definitely bite. And that's not a bad idea because if someone makes a nice presentation, take a small percentage of the monthly revenue for operating expenses, and obviously because it takes time and effort to build such a pool. And so, I think that there's merit to that to building something like that. Um, James says, you have the opinion to reinvest your Kyber rewards back into KNC or stack some more F. Well, Kyber rewards are in Ethereum. So I think it's important to be diversified. So you're going to keep some of the Ethereum, and I think it's also good to grow a recurring revenue stream. So you want to reinvest into Kyber. You also want to diversify. You want to reinvest into other assets, but never spread too thin and never go all in. So you might consider other assets that produce recurring revenue streams. But I would wait for critical mass with Ethereum enough so you could get a good position. Like for me, I want to get into Bancor, but I also don't want to go too low on my Ethereum position. So I need to wait until my Ethereum position is enough so that I could get into Bancor and still have enough of a satisfying Ethereum position size. Um, so it's complicated. I don't want to go into assets too small of a position because then I don't get the velocity that I'm looking for. Um, and you also don't want to go in too much if something is overbought, overpriced. I mean, look at this. Look at this beautiful chart in the 4 hours. Look at the RSI. This thing is about to likely rip to the upside. You got a higher low right here as compared to here. So that means the pullback was less strong. And look at the MACD. If this bottoms here, I'd wait a little bit. If this bottoms right about here, that's a good sign. I think this will have another leg up sooner than later. I think the chart looks good. I mean, sure as hell looks much better than this garbage. I mean, look at this thing. Look at this thing. This thing is pretty much topped out over here. Look at this resistance. You got resistance here. You got resistance. Boom, boom, boom. There's 4 hits of resistance. It's not a higher high, and you're overbought. You're in overbought territory. This thing's going to turn around. I mean, it's not something I would even consider for a second to assign value. And it's even worse with Tesla. I mean, look at this. Overbought. The MACD's through the roof, and the chart has absolutely no support on the way down. When this thing comes down, it's going to be like a bowling ball falling through window panes. There's no support whatsoever. And support means it's basically investor sentiment that other people will get back in at a particular price because of historical purposes and just shared sentiment purposes. And that's why these technicals are so fascinating because they really give insight into the sentiment and the psychology of persons that are placing positions. Did you buy just nibble? Do you have to have a certain amount to stake Kyber? No, zero. You have 5 Kyber, but if you if you stake 5 Kyber, you're going to get zero ROI, APY, or whatever, however you want to quantify the returns. So it's complicated choices of how much of a position to create. Is there any opinions that Digibyte could consider locking up number of No, it's not even possible. It's not technologically possible. Digibyte is a UTXO blockchain. Very different use case and value proposition. A very different investment strategy is applied to UTXO change as compared to the smart contract platforms, and very, very different timelines for substantial appreciation need to be considered. In my opinion, Digibyte is a long-term appreciation type asset. I do not expect short-term appreciation anytime soon, but as I've said many times, Digibyte is a fixed position in my portfolio. I also look forward to somehow my work arrangement changing and getting back to work on Digibyte software. One day. I'd love that. Let's look through the questions. We're running out of time. There's no minimum. Oh, that was just a couple of comments back and forth. Okay, I'm sorry for the first 5 minutes. That was horrible. I'll be better prepared next time. This was a wonderful stream. I love this topic. Love the big picture. Let's hit it again. Hit me up on Twitter. Do you want me to talk about this again? Do you want me to go into a little bit more of the philosophy of how the monetary system works and the significance of crypto and this global uh, shit show of equities, fiat, precious metals, and what does it all mean? And how do we position ourselves? And how do we protect ourselves? So if you ping me on Twitter, I'm more than happy to talk about specific topics. But in any case, if folks don't, I will throw up a poll, and we're going to get some good content tomorrow, as always. I love it. Thank you, everyone, for joining. Tomorrow's another video. Always something to talk about. I wish you all a wonderful day. Peace.